Hey everyone, Jeff Dorman here, CIO of ARCA, back for another edition of This is Our Two Satoshis Live. For those not familiar, ARCA is a full-service asset management firm dedicated to digital assets, and every Monday we release a blog titled That's Our Two Satoshis. You can find it on ar.ca. Joining me today is my colleague and friend, Hassan Basiri. How you doing, pal?
Good. I didn't know we were friends.
Oh yeah, we're definitely friends.
Okay. All right.
Anytime you're in the metaverse together, you're
Oh
friends.
yeah, yeah.
You
The
can you
metaverse
can
makes bonds. Yeah, for
Yeah,
sure.
we can. Our avatars are friends. How about
Yeah, that's true.
that? So let's talk. Let's talk about what happened in the market. I think when I was putting this together last night, I was stuffed with my kids' candy, and I was shocked actually. I knew gaming and NFTs had a big move last week, but I was putting together the numbers. I always go to Masari's great publicly available information on pricing, and I was looking at the week over week prices. I'm like, okay, Bitcoin was up about 1%, smart contract platforms up a couple percent, pretty standard, and then gaming and NFTs on average up 73% last week, and now up over 9,000% for the year. So this isn't exactly an index; it's just a collection of some of the top performing gaming and NFT assets. But I was actually pretty shocked. Even though I saw some of the big moves live, I didn't realize the entire space had moved that much. So this was clearly on the announcement last week that Facebook was changing its name to Meta and was going to be getting involved in specifically into the metaverse. And I think the language they used was that they think crypto and NFTs specifically were going to be an important technical factor for the building out of the metaverse. So you're always skeptical of some of these things. What's your immediate takeaway of what Facebook said versus what will actually happen?
I mean, I think it's really good for them in terms of like integrating with the younger crowd. I mean, that's not like a fundamental analysis, but just generally, like if you talk to a lot of younger people, much younger than you and I, Jeff, a lot of them aren't even using Facebook anymore, or are not on Facebook anymore, don't have accounts. And I think by trying to like roll back and pivot to some of the metaverse stuff where you have avatars and you have NFTs and you have things that it's not explicitly like a human face. It's just trying to like connect with their original demographic more. So I think it's a good move from them personally, and I definitely think it's going to help. Crypto gaming tokens and crypto NFTs and metaverses, things like you saw in Sand and Mana for sure.
Yeah, for sure. I totally agree with that. I mean, the moves were incredible, right? Decentraland was up 244% last week. Sandbox was up 107%. Alluvium up 15%, Engine up 30%. Some of these aren't even really gaming and metaverse tokens. Decentral Games, one of the ones that Arca's invested in, Decentral Games up 20%. Pretty strong moves. I think for me it was three takeaways. One, I'm going to steal directly from our friends over at FalconX, which was they basically were talking about just what this means from an adoption or from an on ramp to digital assets, right? Gaming companies like Axie Infinity, for example. Axie Infinity has 2 million daily active users. In totality, since DeFi started, there's only been 3.7 million wallets that have been used since 2018. And obviously, we know some of those wallets are double and even quadruple counted. So basically, in a single day, Axie Infinity already has basically the entire user base of DeFi. Now, Facebook has 1.9 billion daily active users. So if even a fraction of those somehow get on ramped into digital assets, it's a home run. And this is something we've talked about in the past, which is, 3 years ago, there isn't a single person in the world who came into digital assets who didn't start with Bitcoin. But now it's not the case anymore, right? A lot of people come directly into Ethereum. Maybe they come directly into DeFi, directly into gaming or NFTs. There's a lot of different ways to get into digital assets now besides just Bitcoin. And I think if Facebook does follow through with this, that's just a home run in terms of the adoption that we're going to see in gaming and NFTs. I think the second takeaway for me was that in terms of what assets went up last week, it really probably wasn't very well thought out in terms of who benefits the most from Facebook's conversion if it actually happens. I think this is just another example of there's just not that many ways to express themes in digital assets. When there's a real identifiable theme, you jump on the two or three assets that are the most pure play. And for instance, there's thousands and thousands of casinos in the world. But if all of a sudden there's regulation that gets passed that makes casinos more valuable, you're going to buy MGM or Las Vegas Sands or Wynn, right? There's only about 3 or 4 stocks that give you exposure to casinos. And the same thing is true here, is that as soon as they heard the word Facebook and metaverse, you just go out there and buy the ones that are most closely affiliated. And I think that was a huge boon to that space. But the reality is, again, they're up 9,000% for the year. It's not like this happened just last week. They've been going up pretty much the entire year. And then lastly, I think the other major takeaway for me was, I think Facebook probably had to do something like this, right? They've been underperforming other equities. As you said, their user base is certainly not getting younger; it's getting older. They've been in, raked through the coals in the media for the last few weeks or the last few years, really, for everything that they've been doing. I think they had to make a pivot, and whether or not they follow through, I don't know. We saw this again 2.5 years ago when they tried to get into the stable coin through Libra, but whether or not they follow through, I don't know. But certainly, the hint or even the threat of following through, 1.9 billion daily active users is nothing to sneeze at. So those are my takeaways. You got to, what do you think happens from here with these gaming and NFT tokens?
I mean, I really think that, I mean, I don't know if they can continue at the pace they're at right now, but I think, in crypto especially, I think price moves ahead of fundamentals very often. And I think, Sandbox and Mana are both amazing. They're going to be amazing tokens. They already are. They're performing amazing. And I just think those ecosystems are going to continue to be built out. And they're going to be less buggy and more user friendly. And you're going to be able to play games and move around and buy things and trade skins and trade NFTs a lot easier as the ecosystems grow. I mean, I hear this criticism pretty often of Decentraland that, there's no point to it. There's no purpose. You get into this world, and other than walking around in the metaverse and maybe going to like the casino, there's nothing really to do yet. And that may be true now, but that's not necessarily going to be true in three to 4 months from now, when there's more worlds are built out and the gameplay gets better and more games are played. And these things have a network effect too, right? If I'm in there and my friends are in there, it's more likely that more and more people come. And as more and more people create avatars and NFTs, there's just going to be like this flywheel of adoption into this world. And all the games within Decentraland, like, we talked about Decentral Games, I think that's going to be great for those things, because people always want to play games. They want to play poker. They want to play blackjack. And we're at the start of something really interesting here. And I agree with what you said too. Like, people don't, as much as we care about Bitcoin and love Bitcoin, a lot of the people coming into the space right now, not only do they not care about Bitcoin, they've never owned Bitcoin. They just own the other tokens. And as long as these tokens have utility, it's great for the space and it's great for the tokens.
Yeah, I think you hit it on the head, which is, investors and price tend to get ahead of the fundamentals.
Right.
And that doesn't necessarily mean that the fundamentals won't catch up. It just means that investors are paid to get ahead of that. So when you
Right.
see a big move like Decentraland or Decentral Games, or, even Illuvium, which is, not even launched yet, and the
Right.
token is up, almost
A
well
billion
over, well over 100x, probably more like 500x at this point. It hasn't even launched yet. So it's clear investors are getting ahead of what's coming rather than looking what's there. So let's shift gears here for a second. Did you happen to notice October just ended? Obviously, a very strong month for Bitcoin, Ethereum, a lot of digital assets, equities flying as well. The Nasdaq was up over 7%. Did you happen to see what the crypto stocks did last month?
They went up. They were up 40 to 50%, was my understanding.
It was huge. Yeah, Coinbase up 40% for the month. Galaxy Digital up 65%. The new Backed token, which that might be becoming a meme stock already, even though it's only been around for a few months. But Backed was up 320%. The miners, Hut and Canaan, were up 40 to 50%. MicroStrategy up 25%. And you go down the list, Marathon Blockchain up 65%. Silvergate Bank up 35%. Huge moves. The one outlier was Robinhood. Robinhood down 17% after pretty dismal earnings. So my opinion on Robinhood and what's coming next. But Robinhood has somewhere between 19 and 22 million monthly active users. What do you think happens next with regard to Robinhood and digital asset trading?
I think Robinhood's going to be the new Coinbase listing, because they need it. They need to generate revenues, and they know people want to trade crypto. And I personally hope they list better tokens other than your Litecoins, Bitcoin Cash, ETHs. I hope they list tokens that actually accrue value and can be modeled in some fundamental way, because that's just, I know everyone, Robinhood makes money off volume and selling, obviously, the order flow. But I hope that eventually they start to think about the tokens that they're listing and list quality tokens to get more people ingratiated in the space.
Yeah, it's really funny, right? Robinhood is supposed to be this vision of the future for electronic trading, and then their crypto offering is literally a relic of 5 years ago.
Yeah.
We just spent a minute ago talking about the on-ramps into digital assets, and it wasn't Bitcoin, it wasn't necessarily Ethereum, it was your gaming, your NFT, your Web 3.0. You're not getting a lot of that exposure on Robinhood. Right now, Robinhood lists 7 tokens. It's Bitcoin, Ethereum, Dogecoin, Litecoin, Bitcoin Cash, Ethereum Classic, and Bitcoin Satoshi Vision. So, not exactly a murderer's row of representative tokens of the digital asset space. So I agree with you. I think Robinhood has absolutely no choice but to list more tokens. I'd be very curious to know what their listing process is, or what is stopping them or preventing them from issuing or for listing better tokens. But I agree with you. Like, let's say Axie Infinity, top gaming token gets listed, or let's say something like an Arweave or something like a Helium gets listed in Web 3.0. If that ever happens, you got 20 million customers immediately who will dive into this. So I think Coinbase listings, in my opinion, are dead. Coinbase now lists everything. Most people already have a Coinbase account. I think Robinhood listings are where we're headed in 2022 if you're looking for catalysts or events.
Right. No, definitely. And like one thing I'll say is like, Shiba, like the dog meme coins were ripping last week, and a big rumor behind like Shiba's rise was that Robinhood was going to list it. And I would say of all the coins, like between Shiba and Doge, I actually prefer Shiba because it has smart contract functionality, and you can stake on it and you can farm on it, and it actually does more things than Doge. And yeah, I mean, other than that, like it's interesting. I would love to know their process of what they choose to list. Just I would love to know what Coinbase's process and what they choose to list, because I do this all day, every day for 18 hours a day, and I don't even recognize some of the coins that Coinbase is listing these days. So
Yeah,
it's
well, as you
interesting.
mentioned, we know how these guys make money. They make money because of volume. So it doesn't matter if you're listing GameStop stock or AMC or Dogecoin or Shiba. If you've got something that people are going to trade, it seems to be much more important than actually giving their customers
Quality asset.
quality assets. Yeah. All right. Well, anyway, one to keep your eye on from here on out is Robinhood. All right, let's take it home here. I know the Bitcoin ETF is what we talked about on your last week. The 1.3 billion of assets came into the new ProShares Bitcoin ETF. That's BITO. What were some of the knock-on effects, though? Forget the price of Bitcoin. We know that was up 40% last month. We know Bitcoin has, basically rose into the listing and then started to sell off post-listing. But there was a lot
Right.
of knock-on effects from what happened. What are you seeing out there in terms of positive or negative externalities from this ETF?
I mean, for yield farming or for credit opportunity investors, like this BitGo ETF has been a real boon, and it's opening up a lot of interesting opportunities to generate safe risk adjusted yield. The way the BitGo ETF works is it has to buy the front month contract, and as that contract expires, it has to sell it and then rebuy the next front month contract. And what this does is it pushes the front month futures contract artificially much higher than spot. Right now, that front month contract is like annualizing at like 15% higher than spot. And what this does is traders demand more leverage to be able to sell that basis. And because there's more demand for leverage, the rates go up. And because the rates go up, like our digital yield fund can lend at higher rates than it was lending at 2-3 months ago. Because the rates are higher, that means yield farming is interesting again, because you can borrow and generate much higher returns than 12 to 15% in some of the farms. And there's a ton of like corollary effects as well, like at the money volatility increases because dealers have to buy or sell calls to hedge their risk if they're shorting the basis and things like that. So the initial impact of a higher front month contract has many trickle down effects.
Yeah, and I think this is super interesting, right? I mean, a lot of people forget Bitcoin maximals or not, right? But Bitcoin certainly attracts the most attention from the media. But it's pretty interesting that here we have something that was 100% just related to Bitcoin and nothing else, the ETF, and yet it had so many different trickle down effects throughout the rest of the market. I mean, I was looking at Curve, for example, right? Curve TVL went from 14 billion to 20 billion in October.
Yeah.
And that's a big rise, right? And that's 100% related to what we're talking about here, right? The demand and interest in stablecoins has risen because of this need for leverage and this ability to take advantage of the basis. So I always find things like this just absolutely fascinating, where finally we have something that actually is Bitcoin specific instead of other things that the market tries to make Bitcoin specific, and yet even that has a ton of different ancillary effects on DeFi and on yield farming and lending and even options volatility. So pretty cool to see.
Yeah, and to your point, like even with Curve, right? What are the knock-on effects from Curve? Curve is going up in price. Curve's TVL is going up. So what farms Curve? Wi-Fi farms Curve. Convex farms for Curve. Those are going up. The interest rate swap protocols like Element.fi, you can get a fixed rate. You can get exposure to fixed rates on Element.fi, and whatever's farming Curve, that impacts that fixed rate. The yield tokens, which are impacted by this, which have exposure to the vaults on Curve, are going up. So there's always it's a very, very interesting puzzle. And like to your point, everything has a knock-on effect, and that knock-on effect probably has a tertiary effect.
Yeah, agreed. All right. Well, let's hope that that secondary and tertiary effect leads to a pretty strong November, like we just saw in October. I think so. If October was called Uptober, I guess we have to call November No Downber. Nothing goes down. I don't know, but
We'll think.
we'll think about it some more. But I'll say the only real risk I see right now on the horizon is really the macro world. We keep tabs on a lot of different risk factors, and they're as bullish and positive as we've seen from a macro standpoint. I think the only one that keeps me up a little bit at night right now is that the equity market and the bond market are behaving completely differently. So the VIX, which measures the equity volatility, that's basically at the year-to-date lows. But Move, which tracks bond market or interest rate volatility, that's been rising and is basically at the year-to-date highs. So the market is basically telling you that the equity market doesn't care about rates right now. They don't care about the Fed. They think everything's fine. Earnings are great. 82% of earnings, I think, beat estimates in the third quarter. The bond market is telling you, look out, there's some scary shit happening. So I don't know which one's going to be right, but I can tell you that that's not normal when these diverge like that. So we'll have to keep an eye on that. But what I care about is we ran the numbers. The first 10 days of every month has been incredibly bullish this year. The average return for the first 10 days this year in the digital asset market, according to the Bloomberg Galaxy Crypto Index, the average is up 15.5% for the first 10 days versus basically flat for the rest of the month. So I think I would expect us to get off to a hot start for November, certainly based on the institutional inflows that are causing these first week returns. What do you see beyond that, though?
I mean, there's still, in terms of crypto market specific.
Yeah, for sure.
Yeah, I mean, like there's a ton of interesting catalyst plays, this month. I mean, we have the dot parachains that are, it's launching on the 11th. This is like a landmark event. It's been theoretically coming for like 7 months now. I think it's finally here. People are excited about it, especially based on the Kusama parachain events. And what else do we have? We have Decentral Games is undergoing a few interesting catalysts, which should help, one, the liquidity of the token, and two, help people buy the token more easily, because it's an expensive unit bias token. It's like a $500 token. But like they're going to potentially be going through a redenomination of 1,000-to-1 split. So all of a sudden, a $500 token is going to turn into a 50-cent token. That will be good for liquidity as well as retail bias, unit bias. And then we also have things like, Tezos getting into NFTs and launching a Grammy marketplace, or being the exclusive marketplace for Grammy NFTs on their platform. So, I mean, we have a lot of events this week to look forward to, or this month to look forward to, and hopefully, I mean, they're going to work out.
Yeah, I agree. I think events and catalysts are going to be a big driver of returns here for the rest of the year, with a lot coming. So, well, that's great. Well, anyone for all those listening here, Hassan Basiri, one of the smartest guys in digital assets, get to know him. And I guess that's our two Satoshis for this week. You can find everything again on our website at ar.ca, and we'll be out again next week. Hassan, thanks for joining me, my man.
Thank you, Jeff. Bye, guys.